Now we're on air.
I'm laughing because at some point we'll actually get used to how this stuff works.
Right. We've given like 3 intros already.
It's going.
Welcome back, people. Back to the Trader's Edge. I'm Jim Urio. As always, Bob Iacino. Thank you for having us. Some things have not changed this week. My picture is still above Bobby's on the intro, and I'm pleased about that. Other things have changed.
Hard. I've been trying to pull a Matt Getz to get you
to get me ousted. Yeah. So I was watching Bloomberg today, and a girl that we know, it was Anne Marie Horton. You know her. You're friendly with her, right? Yeah, 3 different times she said that McCarthy has been ousted. The word is ousted. Right?
Ousted. Yeah, it's ousted.
Yeah.
Go ahead.
No, you said. Yeah.
No, what I was going to say is I've spoken to her multiple times about. I'm going to say this publicly, and she can come on if she has any reason to watch this lunacy. Several times she said, I would really love to come on the podcast. Let me check. And then she goes silent. Yeah. And she just doesn't get back to us. And there might be someone in her ear. I'm not sure. But she is an extremely balanced political reporter. Like, she calls people out.
I agree. I like her quite a bit.
Like when she's doing interviews, one-on-one interviews, she doesn't really let people get away with things. She'll at least ask the question a second or a third time. And then she just runs out of time.
But it brings up the point here is that mainstream media has to deal with a lot of sponsors. Bobby and I kind of reviewed as a little bit rogue, which I like that rep. And that's one of the reasons we got bounced out of some of the finest media outlets. Actually, just kidding about that. I did just run into our buddy Rick Santelli. We had an interesting talk about just that. I'll tell you about that off air. We have a special guest today who First Trust Advisors. They're one of my favorite companies. Everybody I know who works for them is fearless, is intelligent, says what's on their mind, and doesn't seem to have to worry about cowering to what people think is the right thing to say. I really like that. We have Bob Stein, who's the Deputy Chief Economist, works with our other good friend, Brian Westbury there. Also spent some time in government. He probably can regale us with some tales about that. So let's bring in Bob Stein.
Let's do it. Enough said.
Bob, before Bobby can poison you with any of his nonsense, you think that my picture should be above his picture on the intro, right? I mean, it's settled science.
Well, I wouldn't mind if there was an ouster of some kind and it, got top billing, maybe once or twice. I think that would be okay.
I will say this, the second that someone says it's settled science, what do we all conclude?
It's not settled science.
Not settled science.
There are no experts. There are no experts. There's no such thing.
Oh, definitely not. But before we move on, could you tell these guys about First Trust? I love your company. What do you guys do?
So First Trust, we're headquartered in Wheaton, Illinois. We also have offices in Austin, Texas, Nashville, Tennessee. We have about 225 billion or so under management, everything from ETFs, which is a little more than half of that, 225 or so. We have unit investment trusts, which were kind of the precursor product, if you will, to ETFs, some alternative investments as well. So we're a broadly diversified fund. Here's what's great. Here's the best part about First Trust. If you think Armageddon is tomorrow, we have a product for you. Okay. You think things are great? We have a product for you. And so they send us around the country to talk. They don't tell us what to say. If I want to be bearish, I can be bearish. If I want to be bullish, I can be bullish. Fantastic. Great.
That's why I think you guys are eventually going to rule the world, because people are getting sick to death of hearing the company line. And I think that's amazing. And by the way, this is not an ambush. I just thought of this at the moment. It's the fact that Bobby and I are huge fanboys of First Trust. Perhaps maybe sponsorship opportunities. We'll talk about that later. But man, anyway, this is a wild week. I personally think that in order to decipher this rapid rise in long end rates and what it's going to mean, we have to first ascertain why it happened. What are your thoughts?
Okay, 2 thoughts. If you look at expectations about a rate hike in November, December, January, they've barely budged. So this is not about people suddenly pricing in another rate hike. Okay, it's about, in my opinion, two things going on. Number one, people are raising their expectation of what the long-term or the short-term yield will be over the next 10 years on average. And so even though the Fed hasn't moved it from 2.5%, which has been their average projection for quite some time, there is thinking in the markets that maybe that does have to move up, maybe 25 or 50 basis points over time. So I think that's added to it. Point number two, which has me concerned, okay, and which has changed my opinion about what's going on in the world over the past 6 months, which is that the U.S. is running, and it's dawning on the market, the U.S. government is running the most reckless, most irresponsible budget in the history of the country.
Boom.
Okay.
Yes.
Now, exactly. And I'm not, this is not a partisan comment. Okay.
No.
I spent, I worked for the George W. Bush administration at the Treasury Department for 4 years. Trust me, I don't wear that as a badge of honor. It's just a statement of fact. I was a political appointee. And I spent 8 years defending the budgets under President Obama. I didn't say that they're what I would want to see in the world, but there was no inkling whatsoever that we were completely mismanaging the federal debt or completely mismanaging budget. There were more taxes than I'd like, more spending than I'd like, but the deficits weren't out of order, very manageable. Okay, same thing under Trump. This has completely changed in the past 12 months. And it's not just Biden's fault, although it kind of mostly is. Okay. It's also the Republicans' fault. I mean, back in the Bush administration 20 years ago, remember how George W. Bush is the guy who got rid of the 30-year Treasury bond.
Oh
yeah.
Horrible move. Horrible move. Remember Fisher at the Treasury Department?
I do remember now, yeah.
And everybody, and the 10-year will come down and we could refinance all those mortgages. Okay, Obama was actually good at this. Obama reintroduced the 30-year, at least his Treasury Department did. So good for him. Okay. President Trump and Joe Biden early in his administration missed a golden opportunity to issue massively very long-term debt, locked in, fixed. We didn't do it. And I'm talking 100-year debt, maybe even 500-year debt. Okay, seriously. I mean, why not? The British Empire.
Yeah, sure. But what's the point? What's the point of doing that to be able to finance all your current debt if you're not going to change your habits at all and you're still going to issue a shit ton? And can you walk through people why that's affecting long end rates and making them scream?
Sure. Well, the reason you want to do it when we had the opportunity a year or two ago is because it's kind of like paying life insurance. Okay. You hope you never collect on all the premiums you pay. I mean, that's a good thing if you don't die.
Yeah.
But you're willing to pay a premium. You're willing to pay a little extra year by year so that you never run into an emergency, a wall where you suddenly have to refinance or hit a problematic situation. Like if you die, leave your family without income. In the government's case, it would be having to refinance at a really inopportune time. So we could have locked in everything and just been paying interest on a substantial amount of debt. So what's going on now? And by the way, okay, I've been talking about this a lot. So just bear with me for a second. I'm going to throw a lot of numbers. I don't like throwing a lot of numbers at people. Okay. Even for
got my pen.
Yeah, exactly. Okay. If you're taking notes at home, get a pen and a pencil because you might just to follow me makes it a little easier. Okay. Last year's budget deficit, and by last year, I mean fiscal 2022. It ended more than a year ago. Okay. Last year's budget deficit, 5.5% of GDP. Okay. The year that just ended, 6.5% of GDP. So it sounds like no big deal, no big change. But superficially, they are hiding a dire situation. Maybe dire is a little strong, but not too strong. And here's why. The previous year's budget deficit, 5.5% of GDP, that included the cost of Joe Biden's student loan plan. Okay. The way they do it, it's kind of like a bank with loan loss reserves. You know, you take all the present value of those lower future payments and you pack it into the year when you make that decision. Or like if you're a bank, you realize that there are credit risks. So you pack it into that 1 year when you discover it. Okay. That costs 1.5% of GDP. So without that student loan plan, that Biden originally announced, the deficit for the last year would have been like 4% of GDP. Okay, remember that number, 4%. Well, this year's deficit is 6.5% officially, but that includes the fact that Supreme Court nullified his plan. And so the Education Department gets to write up the value of those loans, right? And that's about 1.3% of GDP. God. So if it weren't for that announcement and then the nullification, whatever, last year's budget deficit, or the year that just finished, would have been 7.8% of GDP.
Jesus.
Okay. From 4% in 1 year to 7.8. Now here's the kicker. The biggest budget deficit ever under Reagan was in 1982, 5.9% of GDP. Now remember the grief he took about budget deficits? Okay, we're old enough to remember that. Okay,
yeah,
5.9% of GDP. He had an excuse. Unemployment was 10%. What's unemployment now? 3.5%, and we're running a bigger underlying budget deficit than Reagan was running. But there's one more thing. Okay, it gets worse.
But Jose, no, but wait, there's more.
That's funny you say that, Jim, because when I'm giving my speeches live, I know I sound like the guy on the ads that says, but wait, there's more, but there really is more this time. Okay. This Ginsu knife will cut through it. No, I mean, so.
If you end this with call now, we're going to know something's fishy.
Okay. So we went from a 4% GDP deficit to 7.8 in 1 year. You look back, I look back until the Civil War, okay? And with the exception of a major war, Civil War, World War I, World War II, okay, not even Vietnam or Korea fit this, okay? And those were a lot of people coming home, unfortunately, in body bags. But unless there's a major war or recession, we've never done 3.5 to 4 percentage points worse on the budget deficit than previous year. And again, the unemployment rate for last fiscal year averaged 3.5%. This is the most reckless, most irresponsible budget in the history of the country. You don't like if John Maynard Keynes knew this was happening, he'd be rolling over in his grave. Like seriously, this is not Keynesianism. This is like out and out modern monetary theory of some sort.
Yes, Mosler and Kelvin, right? Yeah.
So I always have sort of a pre-written first question, and then I kind of go by the seat of my pants after that. But I have to ask you, because you were Assistant Secretary for Economic Policy at the damn U.S. Treasury Department, right? And then you were Chief Economist for Senate Budget Committee. So in both of those roles, you have to help form policy for people who just care about the next election. What the hell is that like?
Okay, great question. So I have to tell you, in 2001 and 2002, when I was Chief Economist in Senate Budget, the world was easy. That was the era of candy. Okay.
2001, of course.
Yeah, 2001, 2002.
Yeah.
Fiscal candy. Okay. So we had gone through that long period in the 80s and 90s when the interest burden was really high relative to the size of our economy and federal revenue. We were coming out of that. So everything looked great. Okay. We were, Greenspan had talked in 2000 and 2001 that the budget surpluses were going to remain for so long, we might have an issue with not having enough debt to service the needs of foreign central banks that want to hold treasury securities. We might not have enough debt issued to manage U.S. monetary policy. So they were starting to grapple with that issue. So it's really hard to describe how easy my job was in 2001 and 2002. It was either we're running a surplus or we're running a really small deficit. That's it. Those were the trade-offs. So nobody cared. Okay. And then under Bush, I was there from early 2003 to the end of 2006. And things were even easy back then because the interest cost was still low relative to revenue, relative to GDP. So just based on circumstances, my job was, I just came in an era when I could say, well, this is a good policy, this is a bad policy, but even the bad policy is not going to be that hurtful because there's so much absorption capacity to carry debt. So I didn't have to spend much time on it. Now, I have to tell you, generally speaking, time and time again, I'd be in meetings with a Treasury Secretary or a senator, and they're like, okay, we know what the right thing is, but I have these constraints I'm working under, and I have to do X, Y, and Z. So I'm going to try to minimize the pain to the economy from X, Y, Z, but I still have to do X, Y, Z. And there's really no, as an economist, there's no comeback to that. I mean, what do you say as an economist? Okay. And what you really have to talk about is political philosophy, I guess. But I don't really have, I mean, I think I have expertise there, but is there an American who doesn't think they have expertise there?
Exactly. So people, I want to bring it back. What we are saying here, if some people have lost track of the thread, is that one of the reasons that short-term rates have gone through the roof is that we realize that the government is going to be issuing debt, borrowing money, and is essentially selling bonds, and the buyers have just become less excited about buying it. Part of that is the fact that M2 money supply has been contracted probably 5%-ish, which means there's not as much money out there. Bob, can you underscore that? Is that pretty much the way it is?
Yeah, I mean, basically you have the federal government issuing bonds hand over fist at the same time that the Federal Reserve is doing quantitative tightening, which even though they're saying, oh, we're letting maturing securities, we're not rolling over maturing securities, that's the same thing as selling. Okay. Right. So the amount of issuance is enormous, and it's dawning on the market that what's going to happen next year and the year after, even if the Fed stops quantitative tightening, and I do think they stop at a certain point, once something will break at some point, and they'll be like, oh, we're done. Okay. All of a sudden. But we're going to be running enormous federal budget deficits as far as the eye can see. And it looks like, if the race is Biden versus Trump, I don't think either of them are really going to be talking about deficit reduction.
No.
I mean, Trump's going to be talking about continuing his tax cuts. And like in 2016 and 2020, he's not going to be talking about reforming Social Security or reforming Medicare. Maybe he'll talk about Medicaid. Okay, but not Medicare and Social Security, because those are older voters. And Joe Biden
who actually vote
is going to, exactly. And Joe Biden's going to be talking about defending all those entitlement programs. And neither party is going to say we're going to have a peace dividend, because no one believes that. I mean, think about the late 90s and how great that was with the peace dividend. Okay,
what is a peace dividend? I forget.
Yeah, exactly. Like, at the end of the Cold War, we could reduce military spending relative to the size of our economy.
Right.
We can't do that. We're going to be spending more relative to the size of the economy on national defense and the military than we did in the previous decade because of China. I mean, China, in my view, is preparing for war. I'm not saying there's going to be a war, but they're preparing for war just in case their appetite for Taiwan increases enough. Well, if we want to prevent them from taking Taiwan, we've got to be prepared for war too. And that means a whole lot more spending on the Navy, the Air Force, and preparing warriors for battle. So again, to prevent a war, we need to do that spending. So we're not going to have a peace dividend. We're going to have the opposite, whatever that is. And so where is the money going to come from? I mean, we're going to, again, I'm going to say what I say in my presentations all over the country. The era of fiscal candy is over. The era of fiscal limits has begun. It's not necessarily going to affect this presidential race, but starting in the midterm elections and beyond, and for the next 20, 30 years, we're going to be in that era of fiscal limits. And we're going to be talking about how to keep the deficit down through some combination of tax hikes and spending cuts. And what that combination will be decided by our elections.
So to kind of bring it back to the markets, and you actually just verbalized a part of my thesis that I didn't really have straight in my head. So thank you for that. I keep telling people that I think, and forget about the investment thesis. The investment thesis is that you should hold physical gold, at least a portion of it. But forget about that part of it and just critique this for me. So I think that we're headed into a recession. And it's not going to be that bad because the Fed is going to cave. They're going to blink, right?
Bingo.
And they're going to be able to rescue the economy on a small scale without actually getting inflation ever down to 2%, at least not for a consistent period of time. Because I think we still have wages, at least the way I measure wages, it's still rising at a fast enough pace that it's not consistent in my mind with 2% inflation. But maybe they get there for a month or two or 6 months or whatever it is. But then they have to rescue the economy. And then we're going to end up in a scenario that they can't fix. Somewhere in maybe 2025, 2026. I don't want to pinpoint the date. That's above my pay grade. And I think they're not going to be able to fix that one. As a matter of fact, I don't know who is. And you mentioned that these two candidates are not going to be talking about deficits or anything else related to the fiscal health of the economy, right? They're just going to be looking at GDP and inflation and leaving everything else out. They're going to be talking about transing kids and censorship and, right versus left and all the other stuff that goes on Twitter and everywhere else. And I can't see a way out. Again, I don't think I'm educated enough to see a way out, to be honest. But what's wrong with that thesis, and where am I going wrong or right?
Okay, let's start at the top. I think we're headed for a recession, just like you do. Yep. I think it's going to be a relatively mild recession, just like you do.
Yep.
I'm a little more optimistic, consistent with my view that we're going to hit this recession. Our view, we're going to hit this recession, that we will temporarily go to or below the Fed's 2% target. Because if the monetary policy is tight enough to induce higher unemployment and in that recession, I think we'll get there. Like you, I don't think we're going to stay there. We'll get there temporarily. Maybe we'll go down to 1.5 and touch that long-term low we had for a long time. Okay. But then we're going to go above again, I think 2.5%, 3%, and that's going to be the long-term trend. I think it's going to be very tough for the Fed to fully rescue the economy like it has during the previous two recessions, because it's boxed in by inflation and inflation expectations. And so I think we have a shallow recession, but it's accompanied with like a jobless recovery to follow that, kind of like 2002.
Okay.
In terms of the long term, I think policymakers in Congress and the presidents as well will eventually respond to this age of limits. Okay, let's go back to the 80s and 90s a little bit. This is my theory. Okay, I have nothing to prove it because my sample size is basically 1. Okay, that's it. So 1981, Reagan comes in and cut tax rates across the board. I think a very good policy for the time. Economy really does well. We had a lot of wind at our back with demographics, all that stuff. So good policy at the time. But let's talk about what happened after that. 1982, payroll tax goes up. Okay, mid-1980s. We're kind of old enough to remember this.
Yep.
Graham-Rudman-Hollings. Okay, a blast from the past, constraining policymakers, Congress, in terms of how much spending they do. When that eventually starts falling apart, there's a Bush budget deal. Okay, Reagan's left. There's a Bush budget deal between the Democrats and the president. He breaks his no new taxes pledge. And we get some discretionary spending caps put in place. Bill Clinton runs for president in 1992, explicitly calling for higher taxes. Explicitly. Okay, Mondale talked about higher taxes in 1984. He got blown out of the water. But in 1992, Bill Clinton, he just says, it'll be the rich, and everybody kind of winks and nudges because they know it won't just be the rich. But, there was a gas tax increase, stuff like that. But he runs explicitly on raising taxes, and he wins. And he does raise taxes. And he keeps those budget caps originally imposed on President George Herbert Walker Bush. And basically, we had a 15-year bipartisan period when policymakers focused on limiting the deficit. Okay? I think not 2024, but starting in 2026 and beyond, we're going to get back there. And the reason is because the bond vigilantes are coming back now. They finally realize what's going on. They're coming over the hill. They're storming the gates. Okay. And we're going to have to do something. We will actually be in a position. Okay. Don't shoot me when I say this. But if we can't get spending cuts and spending limits, tax hikes might actually be a better policy than not raising. No, seriously. Okay, it kills me to say this. It kills me to
Kills me to hear it.
But if we can't, if we're not going to reform entitlements, like any of them, okay, from Obamacare, Medicare, Medicaid, Social Security, none of them. And if we're just going to we can't run these $2 trillion deficits year after year, or 7-8% of GDP. It's actually better to raise taxes. Now, we could talk about how to do it the most efficient way, to get the least squawk, everything like that. But if we're not cutting spending, we have to raise revenue, because the only other alternative is Argentina. And so, and Democrats are more than willing to sign on to that. They'll only talk about tax cuts on the rich, but everybody will know they're lying. And when they win, they'll do it. And it will actually, like, the bond market will be very happy when they do it, right?
So here's my question. So you've outlined, and we both agree, and this is going to be for both of you. Rates are, at least in part, going higher by this mechanism that we talked about, that the federal government has to sell a shit ton of bonds, and the buyers aren't lining up as much. So rates are going higher, and the metals market got just pummeled this week because rates are higher, and they're non-yielding assets, and they don't like higher rates. But if the rates are going higher because we are worried about debt and deficits increasing, that's somewhat paradoxical, because then I want to be holding gold. And like Bobby said, holding physical gold. Is the metals market reading it incorrectly at this point in time? Bob, you first. Bob Stein.
I think that the inverse correlation between yields and metals is too strong for people to kind of look past it. I really do. So that's why I made a video this morning, and I was just, every once in a while I do this crazy thing, and my wife wants me committed, where I set up my phone and I just talk, and I never show it to anybody. It usually is the start of a written piece. I don't always write the written piece, but I did that one, and we were talking with Breen London from the New Orleans Investment Conference on a little Twitter conversation, and I put the video up. And basically, it was like, I think people should be accumulating physical gold while I never want to say the market's wrong, but I do think, let me put it this way, and I don't want anyone to buy gold because I said this. That's my disclaimer. Okay. Do not listen to what I'm saying and go out and buy gold. I don't see a way gold is lower than where it is right now 5 years from now. I can't picture it. Bob?
I can't disagree with you. Okay. I would be more bullish about real estate with these caveats.
That's okay.
Fair. I would not buy real estate with homes on it. I would not buy real estate with commercial structures on it. I would buy vacant land, so you have the optionality to build whatever you want on it when the time comes. I like vacant land. The reason you don't want homes is because I still think homes are overvalued relative to the rents you can get for them. And so I'm not bullish on residential real estate right now, at least for the next couple of years. Commercial real estate, we're obviously familiar with all the ailments in that sector. So I'm not, but vacant land, I think if we believe that inflation is going to be relatively high going forward, then, but real estate has some certain problems depending on the sector, vacant land makes a lot of sense. Now, here's the problem. You got to finance it, because you're not generating any cash flow from it, right? Unless maybe have a concert there every once in a while or something like that. But I think vacant land makes a lot of sense right now.
So I wanted to throw out, because we obviously have a live audience here. And we got a couple of questions.
Wait a second. This is live?
Away. Yeah.
Oh shit. Right.
I can't edit out what I've just said.
No, you cannot. Actually, we never edit shit anyway. That's why stuff. Sorry.
I do that when I'm on Fox all the time. I've done it on the Kudlow show before, and I'll be like, "Oh, I shouldn't have said that. When this goes live, can you just cut that out?" And Larry will be all confused, going, "What are you talking about, dude?" Right?
So let me ask the first question. Michael has a question in here, and He says, how does the McCarthy removal affect the debt train? But I think he means, do you think the McCarthy removal affects the debt train at all?
Okay, in the short term, no, because the Republicans and Democrats agreed earlier to suspend the debt limit until January of 2025. Mm-hmm. So temporarily, it's meaningless. What could be meaningful is what it means about the strength of the positions, relatively speaking, between the parties that they'll take in 2025. Now, my guess is in the end, a default on the debt would be so vastly catastrophic, kind of similar to like a fiscal cliff. Like what if Obama and the Republicans in the House and Senate didn't agree, and by the end of 2012, it's kind of like the fiscal cliff, and the fiscal cliff will be potentially with the Trump tax cuts originally enacted in 2017. No legislator, Republican or Democrat, well, maybe with a couple of exceptions, really at the fringes, wants to preside over a full fiscal cliff disaster. No sensible congressman. And yes, I realize that's fewer than there used to be.
Sensible congressman.
No one even with like a sense of like wanting to remain in the legislative branch of government wants to default in U.S. state. It would just be catastrophic. So I don't think it'll happen. I think there are measures that the Treasury Department could take over and above the measures it's had to take in so far in other historical episodes. But in the end, the debt limit will go up or be suspended. There will be some sort of, to some extent, what just happened with the budget politics of the last 2 weeks is that part of the Republican Party showed the recalcitrant right-wing fringe, and I don't necessarily say that in a negative way. I'm on the right-wing fringe on some issues myself. Okay, they just showed them that, hey, if push comes to shove, we'll tell you to take a hike, and we'll join with Democrats and pass a bill. So maybe that fringe has less leverage, if anything, over a possible debt limit default in terms of expectations of what could happen than it used to.
That's what's interesting to me. And there's another question here, but I want to just comment on what you just said. And then Jimmy, I think this other question is as much for us as it is for Bob. So I'll ask.
How do I get such good hair?
Yeah,
exactly. Go on. Yeah.
I'll ask it, answer it briefly, and then throw it to you guys. But so what you're saying, Bob, is regardless of who is in Congress, so when you started talking about bipartisanship, I said, okay, then there's no Nancy Mace, there's no Marjorie Taylor Greene, there's no Matt Gaetz, there's no AOC, there's no Ayaan Hirsi Ali. What's the name of the guy that pulled the fire alarm, for crap's sake? I assume those people are gone for it to work out at all. But I guess if none of them want to preside over this, then it doesn't really matter.
That's right. Yeah, they don't need their votes. They don't need their votes. There'll be there'll be some sort of centrist coalition leaning toward one party or another, and they'll almost always vote to increase the debt limit. And senators senators they're always 33 or 33 senators, roughly speaking, who aren't up for re-election for 4 more years. And there are 66 to 67 who aren't up for re-election for at least 2 more years.
I just always imagine the senators having a coffee or a scotch going, excuse me, is this a serious one? No? Okay, then I'll be over here.
You're not wrong.
Yeah.
You're not wrong.
All right, so the other question, MM79, he's actually, or he or she is actually quite a frequent viewer. And again, Jimmy, I'll go to you first on this. What do you think about Bitcoin as an alternative to gold? And then either one of us can take it after that.
Funny, on the spin the wheel of asking Bob questions, I was going to throw Bitcoin in there. This was completely random. I think something very, very interesting has happened in the last, call it since last November, as Bitcoin's gone up to 50% share of crypto and options volatility is going straight down. And Bitcoin has rallied 5.5% since mid-August. At the same time, the dollar's up 4%. 10-year yields have gone from 4.2 to 4.8. All other risk assets have felt the weight of that, and Bitcoin has rallied. So I am not one of these crazy Bitcoin holders, and I think that it's in my portfolio. I buy it once a week. I don't even understand what the hell it is, but I do know that it's becoming less volatile, and it's becoming what it was sold to me as, which is a non-correlated hedge against bullshit. Bob Stein, thoughts?
I have no thoughts on Bitcoin.
Okay.
I really don't.
So I'm crossing
I have a question.
crossing that out.
Yeah, I have a question, Jim. Have you ever
Yeah.
actually used Bitcoin to buy anything else than another cryptocurrency?
You know the answer to that question is no, because nobody has, right? So the point Bob's trying to make, you have used Bitcoin to buy something?
So no, I
Bob?
paid a bill. I
Bobby?
paid a bill with it.
Did you really?
Yeah.
Oh.
So I had, I just to tell the story, I had some Bitcoin when PayPal started allowing you to buy Bitcoin through your PayPal app. I tried it. I bought $500 of Bitcoin. And when it turned into $900, I did a PayPal payment and asked PayPal to take it out of my Bitcoin. I mean, it went from $500 to $900, and I paid a $350 bill with it.
You can't say that on air because you didn't put that on your tax form, did you? Scratch that out anyway.
So this was a demo account. It wasn't a real account.
It wasn't a real account, right?
No, I think
Okay.
I think I actually did put them.
I'm
But
sure
anyway,
you did. Yeah.
So my part of the question is this, and Bob, can you comment on this part of it then? You have no opinion on Bitcoin. For my thesis, I like gold a lot better than Bitcoin because even if they outlawed public holding of gold again, which I don't see them doing, they got to come and take it from me. And Bitcoin, I think they can make illegal, to which it's then useless because you can't transact in it, because if you're caught transacting in it, anyone who thinks that in the current regime, there's been Bitcoin that's been seized by governments. It's happened already. So one of the things they sold Bitcoin as, and if there's any Bitcoin, just absolute fanatics out there who can tell me I'm wrong, please reach out to me and correct me on this. But there's been Bitcoin that has been seized in criminal trials. It's happened. So I don't see it as what they sold it as, where it is 1,000% private, can't be taken away from you. And if it's made illegal because the country is trying to restrain the fiscal cliff, I don't see them giving way to Bitcoin as another alternative to the US dollar or to gold. And again, even if they outlaw gold, and somebody put that on Twitter, they go, you guys, they took gold from the public before. Yeah, did they? I mean, they said you can't own it, but did they find it all? Especially at that period of time, when people were much more outlaws than anybody is brave enough to be right now. I don't know, Bob?
Yeah, remember, governments are jealous gods. They're jealous gods. And
we needed to come up with
That's the name of the show. That's the name of the show.
That was it. That was it.
So the idea that they're going to allow some other private currency to persistently exist and become stronger and stronger as the dollar weakens, I find that hard to believe.
Same.
And if they're in a race to find revenue, they want to increase the demand for the dollar, and eventually regulating Bitcoin, maybe not as tightly as China did, okay, but more tightly than it's currently regulated, seems an avenue that they're going to explore. So when I say Bitcoin, I mean cryptocurrencies generally.
In general, but I'll even add to that. And you guys, in a word, tell me if I'm crazy or not. If you told me there was a 20% chance that Bitcoin, Satoshi was actually the CIA or some intelligence agency, and Bitcoin is actually the central bank digital currency that we've been worried about, I don't think that that's ridiculous. I don't think it's true, by the way. But I think it is a less than zero probability. Am I insane, Bob Stein?
No, you're not insane.
And
if
Bob,
I said you were insane, would you have me back on your show?
Sure. Yeah. Are you kidding?
No. You're still not insane. You're still not.
Yes. That guarantees more frequency, not less.
Exactly. We're floor traders. We get called names all the time.
Listen, the one thing that Jim and I
I'm
are
not a conspiracy
about,
guy. I think the theory is wrong because you're saying, hey, I don't even believe my own theory. Okay?
I don't believe it's not a theory. You just say it's less than zero.
It's not 0%.
Yeah.
Mm-hmm. Okay. I would say, I'm trying to think like a good Bayesian outlook here. Based on the fact that you were willing to state it publicly, I think the likelihood of it being accurate is even less. My thought is that it's less likely than you think it is.
Right, because I'd be taking a bullet in the head pretty soon.
Exactly. Hillary Clinton's going to show up with like a Garrett.
Oh shit. We're coming off the road.
One thing Jim and I are sure, that Mark Twain saying, It ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so.
Yep.
Jim and I know for sure that we're complete morons. So we're hoping that ain't so, and probably all of it gets us in trouble.
Right.
Looking forward to it.
Here, let's spin the wheel of questions because I crossed off Bitcoin. So before we only probably got you for about, I don't know, 5-10 more minutes. Well, first of all, you might have to explain what recalcitrant means, but the questions are one of these two questions. Do you want to talk about China and perhaps some of those numbers aren't as bad as they were? Or do you want to state your opinion on whether or not you wished they actually shut down the government and tried to actually force feed some fiscal restraint? Which one of those questions you want to go after?
I like number two.
Okay, let's go with that. Yeah.
Okay. So number one, we should never have any fear about them closing down the government and that leading to a recession. Okay, this is not dispositive of the whole issue. However,
I gotta look up dispositive.
if you look back at the last
dispositive and recalcitrant, stop with these words.
Did I actually use recalcitrant?
Yes, you did.
I'm breaking out the SAT words today. Okay?
Nice.
Okay,
nice.
No more jargon. I'm only going to speak in 1 or 2 syllable words.
Good.
Okay. So a shutdown is never going to cause a recession. You look back at the last 40 years, and the economy has been less likely to be in recession when it's shut than when it's open. Okay, now I understand there might be reverse causation here. That's not an SAT word, by the way. That's, we're just geek speak, okay?
Well, yeah, right, yeah.
We know that. It might be a little reverse because they're less likely to shut it if they think the economy is going to be in the crapper, right?
Right.
Yeah.
So, however, I'm not worried about causing a recession because we shut down the economy. I think that's just baloney. I also think that shutting down the economy can be an extremely useful tool to generate concessions on budget policy from those who want a more expansive government and who are not willing to listen to cutting government. But, and this is important, it should only be done when it's not mixed up with the issue of a debt default. Usually when the Republicans shut down the government or refuse to sign the appropriations bill unless it's cut, it's usually tied up with a debt default, which I think is a completely atrocious, awful move. Because you're basically saying, I want a concession. I'm going to shoot my own baby. You're not going to shoot your own baby.
Don't move, right?
It's so don't do that. Don't mix it up with the debt default. Just focus on appropriations and shutting down the government. It's not going to cause a recession. But there is one other requirement or necessity that you need before you conduct that policy. And that's that the Republican caucus itself has to have a unified proposal that 218 members are willing to sign off on.
Right.
And so I have no problem with Matt Gaetz or whomever else was part of that coalition saying, we want deeper spending cuts. Totally cool with me. I probably want deeper spending cuts than they even want, okay? But they were, one, never capable of forming their own proposal that they all agreed on. And number two, even if they could, you're only as strong as the 218th, because there are 435 members now, the 218th weakest member of your coalition. That's the marginal member. And so if they're not willing to be part of that coalition of 218, then inevitably, unless you want to keep the government closed forever, which is just not going to happen. Okay, it's just not going to happen because that 218.
We can dream, though. We can dream.
You can dream, and it's okay with me if we keep it shut. But I know that 218th member isn't going to agree because they're in a marginal congressional district. Okay, so we just have to deal with the coalition partners we have. So if we know that that hard right group is not going to be willing to join as part of a 218, then the only way you get to 218 is with Democratic votes. And those Democratic votes are going to want more spending than you would otherwise have to do. And so what I think is happening here is that recalcitrant, duplicitous group.
Oh, like it. Yeah.
There you go. They're basically saying they want to retain their budget purity, they're willing to live with the fact that the 218 coalition is going to be a higher spending coalition than if they were members. And they get to complain about being sold out by rhinos. So in the end,
so here's my question.
There will be more spending over the next year because they were not part of that coalition, because they didn't want to be part of a lukewarm deal. But that lukewarm deal is the best we could have done under the circumstances. No
doubt. Okay, but now is the fact that the dollar is still king and that every other currency is going through the same bullshit stuff, does this like the fact you look, it's got 12 straight weeks year-over-year increase, despite the fact that we're issuing huge debt and we're talking about how egregious that's not a $2 word, right? How egregious this whole spending bullshit is the fact that the dollar's the tallest midget, is that emboldening this behavior?
I don't think that the legislators are really concerned about the dollar itself right now. We used to be, like back in the 80s and 90s, and even like the previous decade, there's a little more attention paid to the value of the dollar relative to other currencies. Oh, are our policies tanking the dollar? That could be a negative. I think right now it's not really on the radar screen of lawmakers and policymakers in general. It could get there again. Could get there. So maybe if the dollar were tanking at the same time that interest rates were going up, I think that would be a different issue. But so I guess my answer is yes. I kind of agree with you, but I don't have enough evidence to support that agreement yet.
I have two questions. I got into it. I guess I get into a lot of Twitter arguments, but I got into a Twitter argument with Joe Weisenthal from the Odd Lots podcast over at Bloomberg. And I'm not going to say that about him. But we were talking about spending versus taxation, and he was saying we needed more taxes on the rich. And I was saying, how come nobody ever mentions spending cuts? It's literally not even part of the conversation. We just do a continuing resolution to raise the debt ceiling. And there's no questions about spending cuts, as opposed to, we're going to come up on the debt ceiling again. Well, maybe we shouldn't spend as much, right? And the thing that bothered me is Joe came back with, so Bob, what are your suggestions as to what we should cut? I'm like, dude, I've got a job. Okay, I work all day. If Charlie Crist, who's on the Appropriations Committee in the Senate, in the House, he's a 13th district, I think, here in Florida. He said on a radio show, he's been on the Appropriations Committee since 2019. He started asking for the full budget and still hasn't gotten it. So how am I going to get it to go line by line? So, I mean, is that just a talking point for the tax and spenders to just say, well, what do you want to spend? Oh, yeah, you don't know. Or is it legitimately a deficiency in either party to be able to go line by line? Never mind. You look like I hit it.
$2 word. So here's the deal. It's both. Okay. So the real money really isn't in discretionary spending, because as I mentioned earlier, we're going to have to ramp up military spending. That's discretionary spending. Maybe they can save money here and there, but we're going to be spending more overall over the next decade. So that leaves non-military discretionary spending, stuff like Department of Education, environment, stuff like that. So there's wiggle room there. We could definitely cut a lot of money there. Labor Department. We don't need all those people walking into that huge monstrosity of a building there, thinking of things to regulate all day. We could definitely save money. But the big money is in entitlements. That's where the big money is. So
Social Security particularly, right?
Well, I would say long-term Medicare is the biggest. Okay. So what do we need to do? Number one, we need to unwind Jimmy Carter's mistake. Jimmy Carter is the hidden figure, if you will, behind a lot of this. So late 1970s, they changed the way they calculated your initial benefit amount. Because when they look back at your career, they used to adjust it by inflation. You made money in the 1950s. Well, you got to adjust that up by inflation, right? So they said, no, we're no longer going to do that. We're going to adjust it by not just inflation, but basically productivity growth. We're going to look at nominal wages, which includes productivity growth. Okay. And when you do that, that means that benefits grow faster over time. That one tiny change, okay, done 40 years after the original Social Security program was happening, has exploded benefits over the previous generation and likely to continue to do so. So we need to unwind that so people get an inflation adjustment for their old earnings, not an additional productivity adjustment. I know that's arcane. Only green eye shades people pay attention to that, but we need to unwind Jimmy Carter's mistake. Okay. Number two, we need to convert Medicare, right, which is still largely a fee-for-service program, into a premium support program, which is ironically like Obamacare. Okay, and I'm not saying Obamacare is good for the working age generation, but it would, an Obamacare system for Medicare would be better than the current system because it's premium support, not we'll pay for whatever you get. Okay, and then Medicaid, we need to really focus in on some sort of like system that delivers value to the low income people that tend to be on Medicaid. And I think there are a lot of savings that could be made through preventative care, make other requirements in that program, block grants to the states and let them experiment. So we can save a lot of money there, but it's the entitlements. We've wasted so much time not touching entitlements. And with old age entitlements, now we're in the soup because the baby boomers are retiring.
We're just about got to go, but you said earlier, but just to give you a chance, short answer, and I agree with you on both fronts, and both can exist. That's what we need to do, but also that's not what we're going to do because old people vote, and the second you start to talk about that, you get a finger pointed at you saying you want to take money from old people, right?
I think that's true. That's the way it's been for the previous generation. However, I think there might be a possibility that the Democrats, at least some of them, will start to think, you know what? We'd like to protect Social Security and Medicare, but a lot of these people on Social Security and Medicare, they turn around and vote Republican anyhow. And if we want to spend money, and really buy votes, because the Social Security and Medicare people, those programs have been around so long, they don't feel like we're entitled to their votes because we saved those programs. They think they earned that money. Okay.
Yeah.
Okay.
This is interesting. Yeah.
They want discretionary money because that's the real candy. People feel really happy if you deliver a bridge project to their district. Okay. They're excited about discretionary money. They feel obligated to vote for you because you delivered something specifically for their state or their district. Social Security and Medicare really doesn't buy votes anymore. So there may come a time over the next several years when some Democrats are like, especially young Democrats, urban Democrats, are saying, what are we spending all this time protecting these votes from old people, more whiter than the regular population, more Republican and conservative than the regular population, living in Florida, which is no longer a competitive purple state, it's kind of a reddish state. What are we doing?
Yeah.
So that's a possibility.
Interesting.
But I'm not super confident in that, unfortunately.
Bob, we got about 7 minutes left. You said that.
We do. Oh, good.
Yeah. What I actually wanted to do was, you said you're free to be bullish, bearish, whatever you think, without me dictating the asset class. Where are you?
Great question. So I'm relatively bearish on stocks right now because I think the risk premium is not generous enough to justify aggressive equity investing. So let's say I would normally be, based on my age, risk profile, financial goals, personally, this is my own portfolio, I would be close to 70% equities. Based on, I have college age kids or approaching whatever. So I'm about 35% right now. I'm not completely out of equities. I'm about half of what I normally am. The rest is at a broad combination of fixed income, both short, long, munis, what have you. And I'm happy with that allocation for now. I don't see a need to significantly change that at year end. And I only broadly change it once a year. I'm not like you smart guys trading every 14 minutes or whatever. I can't, I don't know why this minute is different from the minute yesterday. I just don't know what. So I can't make money that way. So I wish I could, but I can't. So So it's just like once a year I reshuffle things, and I'm bearish. I don't think I'll be bearish forever. If we have a big dip, like a 20% dip, I will be ready to go on equities. Okay, I won't wait for the end of the year. If we have a 20% dip in equities, I am on top of that dip.
Robert? Oh, I thought you had another one, Bobby. No.
No, I just want to know where he was.
I know I have then another question because I had something real quick. Is that so? By the way, I've traded bond futures, interest rate futures for my entire 36-year career. 2 weeks ago was the first time I actually used Treasury Direct to buy an actual bond. Okay, so now I'm looking at, and I bought. It was 2 weeks ago. I bought 4-month duration, maybe even up to 2-year duration. What about a 10-year at 4.8? Does that interest you right now?
Well, I'll tell you what I'm buying right now. I bought some today. We're 20-year strips, 20-year zero coupons. Okay,
right.
So you're getting in the vicinity of 5%, locked in for 20 years, right? And if rates go up, they might go down a little. I don't think the U.S. government's going to default in the next 20 years. I love 5%.
Neither do I.
Hey, Jimmy.
Yeah.
Can you you mentioned yesterday that Rick Santelli said something about 13% and maybe some context was missing. Can you add the context and see if Bob Stein laughs or agrees?
I don't know the context. I heard it secondhand that Rick was, and I just saw Rick about an hour and a half ago. We had the nicest conversation, so I'm not going to bash him behind his back. But I heard he said, I think 10-year rates are going to 13%. That is bullshit, right?
Those I'll buy.
I think that's crazy. Okay.
Crazy. Okay, good.
I have absolute respect for Rick Santelli. Okay. I think he's great. I think he's the very best part of CNBC. If I'm watching CNBC, it's because Rick Santelli is on the air. Okay. That's the reason. Okay. So I don't think we go there or anywhere close. We are, and here's why. If we start to go 7-8% in the 10-year, that is going to grab so much attention in Washington, D.C. among so many legislators, but the Senate and House, that you will have an emergency, the likes of which we haven't seen before, at least since the late 70s.
And the Fed will start buying them again, right?
Oh, yeah, but it's not just that. Like, they would work on some sort of long-term deficit plan like faster than you could say Jack Robinson. They really would. Because I think the long-term growth path of the US is 1.5% or so over the next decade.
Hey.
So if we have 13%, that's just unsustainable. That's not long-term unsustainable. That might be short-term unsustainable.
Yeah, right.
That there would be an emergency, and I think the public would support addressing that emergency. So I just don't see 13% anytime in the near future, even in the medium future. I just don't see that happening. So I don't think he's crazy. I just think he's wrong.
We are just about out of time, but we got another question. I just do not want to let the viewer questions go. And this is obviously to you because we're not smart enough to answer it. If the total income of the top 10% in the US is approximately $2.4 trillion and the budget to run the country is over $4 trillion, why do people still think higher taxes are any kind of solution?
Because they don't know what you just said. They don't know it. That's why. That's
nice work, nice job.
Like the whole we cannot tax our way in any real, like, only by taxing high income people to a sustainable budget path for the US. We cannot do it. The only way, if you're going to do it by taxes only, you have to raise taxes on the middle class. Like, I'm not saying that would be a horrible policy. Okay. In fact, raising taxes by 10 percentage points on high income people, like the top rate going from like 37 to 47, which if you ticky tack all those other rates on, you're pretty much back to like the 50% plus or whatever easily. That doesn't raise you enough revenue to tackle the problem. It's not even close.
Not even close.
Yeah. So you either have to have a broad tax on the middle class, okay, which is a bad idea, or In addition to that, some like major spending cuts. There's just no other way.
Awesome. All right,
Jimmy, would
we
you
gotta
agree
go.
that we should reserve Bob Stein for when they snake Gavin Newsom into the nomination and just do a whole show on that?
We'll have lots about it. Yes, Bob. By the way, I will say again to the people who listen to us on both our podcasts, Bob and I might be dumb shits, but for some odd reason, we get guys like Bob Stein to say yes. And come on, and that's probably because we're so fucking cool. Is that if you think that is or not? Hold it. I'm sorry if I said the wrong word on the Trader's Edge. Thank you so much, Bob. I appreciate it very much. So
Been a pleasure.
we do. Yeah. See ya.